One, Bitcoin's price is set by supply and demand. And right now, there is just so much new demand from ETFs purchasing Bitcoin. We see it at Bitwise, from companies purchasing Bitcoin. We think that's going to accelerate in the fall, particularly ETF purchases. Many ETF purchases are by financial advisors or family offices or institutions. They're on holiday right now. Just buy Bitcoin and forget about it and never trade anything. But with a portion of your portfolio, I think it's reasonable to take a very long-term view because, again, the confidence I have on where we'll be 5 years from now is much higher than the confidence of where we'll be in 5 days. Up, down, sideways. Your guess is as good as mine. But over that long time period, I'm really confident. We still think we're going to get to that $200,000 level. We think the end of Q3 and Q4 are going to be a very exciting time for crypto.
Bitcoin has historically followed a pretty predictable 4-year cycle, with 3 years of significant increases followed by a steep fall. Given how frequently we have seen this pattern recur, it is not surprising that many investors are anticipating yet another significant decline in 2026. However, Matt Hougan claims that's no longer the complete story. The way this cycle unfolds may be altered by changes in the regulatory environment, institutional involvement, and market dynamics. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
So I think they've diminished. I should say that. I will say that the biggest black swan event, maybe it was a white swan because I guess I could see it coming, but the biggest risk that I could see coming was one where global regulators collaborated to squash Web3 and blockchain. Um, they can't shut off Bitcoin. They can't shut off Ethereum, but they can make it very difficult for those to penetrate other markets. And for many years, they did. The US was overtly hostile to Web3 and crypto. Many other countries were overtly hostile. China took a very adversarial view against Bitcoin for a number of years. You saw miners move out of that market, and the US did the same. That risk seems to have almost gone away. The US has made a full pivot in favor of crypto. You see other countries aligning with that view. So I think the regulatory risk, which was the biggest, most dangerous black swan, has mostly disappeared. You can't dismiss other risks. You can't dismiss the risk associated with quantum computing. Maybe it wouldn't destroy the Web3 industry, but a shock advance there would really create some ripples and technical difficulties. You can't remove the risk of what I call headline risk, someone doing something bad with crypto. People do bad things with traditional financial assets all the time. But if someone did something really bad with crypto, it would attract media headlines, and that would be negative.
However, nothing can grow constantly. And when do you think corrections will be happening in the new Web3 market paradigm?
Yeah, that's a great question. So just to frame it for people who don't know, historically, Bitcoin and therefore crypto has moved in these really familiar 4-year cycles. For instance, 2011, 2012, and 2013 were big up years. 2014, we pulled back 60 or 70%. And then 2015, 2016, 2017, big up years. 2018, we fell back about 60%. So the worry is that we're approaching that pullback year, right? 23, 24, 25, all big up years for Bitcoin. Could 2026 be a significant pullback? What I was saying in my article is I don't think so. I think the reasons we had pullbacks in the past have become less powerful. Many people associated the pullbacks with the Bitcoin halving. But of course, after every halving, it becomes half as important as it was in the past. Other people talk about interest rates, but interest rates in the US are likely to go down over the next couple of months, not up. So I see those forces as weaker. And at the same time, we have institutions plowing, in my view, what will end up being trillions of dollars of money into Web3 investments. And that moves over a 5 to 10 year cycle. It doesn't happen in 1 year or 2 years. So for all those reasons, I think 2026 will actually be a strong year. But it's a great question from your editor in chief. What does that mean for volatility? Will we still have volatility? And the answer there is absolutely. We're still going to have volatility. Now, I don't think we'll have 70% pullbacks like we had in the past. I think those days are over. I think we may have 30%, 40% pullbacks. They'll probably happen at the same time that we have stock market sharp corrections if the world enters a risk-off market. I think that's entirely possible. But I think we'll have less volatility than we had in the past. And I think we're in for a number of good years in this market. There's just too much investment coming into the space, I think, to hold prices down for very long.
The fact that Hougan brought up a recent speech by SEC Commissioner Paul Atkins is among the message's most notable elements. In the future, Atkins envisioned a world in which decentralized finance protocols and blockchain-based networks will power all financial assets, including stocks, bonds, money market funds, and cryptocurrencies. Project Crypto is an endeavor that Hougan says is the most impressive speech he has ever seen from a regulator. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
But I would encourage people to read a speech by our SEC chairman, Paul Atkins, which just came out last week. It's called Project Crypto. And the SEC is the most important financial regulator in the US, directing the largest financial market. Project Crypto lays out a vision for all financial assets to move over blockchain-based rails and to move on DeFi protocols, to move in single apps, but not just crypto assets, stocks, bonds, money market funds, all financial assets. I think it's the most remarkable speech I've ever read by a regulator. It lays out a vision that would make someone who is pro crypto, pro Web3 almost blush. It's almost more bullish than I am about the impact that this has. And if the leading regulator in the US wants to move financial markets onto blockchain-based rails, there's a good chance that that is going to happen. So, yeah, let me give two pieces of advice. The first is one we talked about earlier, which is these documents are there for you to read. I really do mean it. Go read this speech from Paul Atkins. It was on July 31st. It's a remarkable view from the world's largest financial regulator about what financial markets are going to look like in the next 5 years. And it sort of gives you a roadmap for some of the more interesting areas to consider for investing. So you can do that. It takes about 10 minutes to read. I think those 10 minutes will be extremely well invested. The other thing I would say is, there's a temptation in crypto to try to trade because assets trade 24/7 and they're very volatile and it's very exciting. And I think it's completely fair to speculate on short-term movements with a portion of your crypto portfolio. But if I had one thing that I've learned over 8 years almost of working in this industry is my ability to forecast what's going to happen in the next week is really rough. I actually don't know. I work in this industry full time. I have a team of research analysts. I don't know what's going to happen in the next week. But if you ask me what's going to happen over the next 5 years, I just have huge confidence that crypto will be more important in 5 years than it is today. And what that means, again, is not that you have to just buy Bitcoin and forget about it and never trade anything. But with a portion of your portfolio, I think it's reasonable to take a very long-term view because, again, the confidence I have on where we'll be 5 years from now is much higher than the confidence of where we'll be in 5 days. Up, down, sideways, your guess is as good as mine. But over that long time period, I'm really confident.
Although Bitcoin and the cryptocurrency industry as a whole have historically experienced well-known 4-year cycles of sharp declines followed by sharp increases, Matt Hougan demonstrates why the current dynamics are different. Due to things like Bitcoin halvings and rising interest rates, pullbacks of between 60 and 70% have historically frequently followed times of gain. But such pressures are much weaker now. U.S. interest rates are predicted to fall rather than climb, and the impact of Bitcoin halvings has diminished, eliminating a significant contributor to previous volatility. volatility. Institutional interest is also growing at the same time. Through ETFs, family offices, and large financial institutions, trillions of dollars are progressively pouring into Web3 and cryptocurrency investments, generating a long-term upward momentum that may last for several years. Hougan further emphasizes that although cryptocurrency will always be volatile, the sharp declines of the past are not expected to happen again. More modest corrections in the future, perhaps from 30 to 40%, frequently accompany larger market declines. Crucially, he stresses that supply and demand factors, specifically institutional purchases of Bitcoin, should drive up prices. Demand is expected to increase, particularly in the fall, as big platforms like Morgan Stanley now let customers purchase Bitcoin ETFs, which might push Bitcoin to reach important milestones like $200,000. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.